This is America's Roundtable. Visit us at americasrt.com. Follow us on Twitter at americasrt. You can find us on YouTube and Facebook. Like and share. We are truly pleased to be joined by the Honorable Maurice McTigue, who is the Vice President at the Mercatus Center at George Mason University. He is the Director of the Mercatus Center's Government Accountability Project and a member of its Spending and Budget Initiative and State and Local Policy Project.
The dairy industry in 1985 was creating or producing 35 products from milk. Last year, the dairy industry produced 2,200 products from milk without subsidies.
Wow.
And that's because they realized that the way to be able to get better prices is to make certain that you satisfy the needs of your customer. So they specialize their products or customize them for particular markets or even for particular companies. And by doing that, you can get significantly more money. If you put subsidies in place, then the incentive to do that customization is diluted.
I remember we were buying some cheese and we were comparing the prices, and I believe that the cheese and dairy products coming from New Zealand have pretty high taxes, actually custom taxes here in the United States.
Yes, as a result of the creation of the World Trade Organization after what was called the Uruguay Round, for the first time in those negotiations, agricultural products were included. But the WTO persuaded all of the member countries that what they needed to do was to move away from import restrictions and those kind of restrictions and move everything to tariffs. But the countries concerned were able to determine what their tariff would be. So, for example, the tariff on New Zealand cheese coming into the United States was 94%. Going into Canada, it was 364%. We still sell cheese here, but those are major barriers, but at least we have entry to the market.
Right.
And over time, the decisions creating the WTO said that countries were expected to take their tariffs down to zero or close to zero over the next 10 years. Well, unfortunately, that hasn't happened. They have come down somewhat, but nowhere near to zero, and that would have allowed free trade. The interesting thing is that if you allow free trade, it doesn't necessarily take work or activity away from your producers. Often it actually changes consumer demand and consumer preferences and will be beneficial to your consumers. And particularly if you have very competitive producers who are finding new and better products, then often that drives prices upwards rather than downwards.
Right. I mean, I was just thinking we should be upset and other American consumers by paying double the price from what we should be paying for cheese coming from New Zealand.
Well, I think that if politicians were really thinking about their own future benefits, they would focus more closely on the needs and the preferences of consumers rather than on protecting industries.
Mr. McTigue, we had an interview last week where we addressed, actually last week and week before, the death tax and the bill that was passed by Senate, which we did not address the estate tax or so-called death tax, although much of the discussion and fight centered on it. So if nothing is done, the current estate tax at 35% rate on inheritances worth more than $5 million or $10 million per couple would go back to the rates under Bill Clinton, which is 55% over $1 million or $2 million per couple. This is an incredibly punitive tax on inherited estates, which in our opinion has to be abolished. Like in a number of other developed countries, such as in Canada, Australia, Sweden, and many others that have never had it. We know that New Zealand abolished the inheritance tax or so-called death tax. How did you go about doing that?
Well, I've certainly come to the opinion that the only way to approach changes in taxes is to have a comprehensive approach and look at the entire tax system. If you do that, then the first thing that you need to do is decide what's the purpose of having a taxation system. And in my view, the purpose should be exclusively to raise the revenue that the government needs to fund its activities. So if you use it as just a revenue-raising mechanism, then you should concentrate on making it effective and efficient with minimal distortion to decision-making. And if it's about revenue raising and not about delivering social policy, then you have to look at those things that would be counterproductive to your own competitiveness. And when you look at taxes like wealth taxes or luxury good taxes or things like death duties, they're about redistribution of income rather than about revenue gathering. And what those mechanisms tend to do is that they distort decision making, and they are prejudicial to some businesses as opposed to others. For example, two small businesses in the same kind of activity, one that's a company and owned by a variety of shareholders and one that's owned by the owner or the family. Business that's owned by the family has to make adjustments, or it has to take measures to protect the business against the sudden death of any one of the members. And that means that you're going to distort the allocation of resources inside that business. Whereas its competitor, the company owned business, doesn't have to make those kind of decisions because it's not subject to their taxes. So you get a major distortion, and you also get a major disincentive for family-owned or owned businesses or privately held businesses as opposed to publicly held. That's not good. If it's about redistribution of wealth, or seeing that wealth isn't actually captured by a small number of people, frankly, it doesn't matter over time, because families throughout history have had entrepreneurs who made the family wealthy, and the next 2 or 3 generations managed to squander it. So it levels itself out over time, so the redistribution argument doesn't really stand up. What it should be about is focusing on the revenue that you need and how you improve the competitiveness of your economy, and take all of those other measures out of the tax system and have it clearly focused on revenue raising.
As we sat with Mart Laar, the former Prime Minister of Estonia, he also talked about how they balanced the budget and how they legislated it. So practically it is by law that they had to balance the budget every year, and they passed the flat tax, and he said, well, we soon found ourselves breaking the law. We had surpluses, and what they did is that they returned the money to the people, and they also reduced the flat tax rate. And I know from your extensive experience in traveling to different countries, you also saw other countries having the similar experiences of balancing the budgets, reducing the rate, reducing government spending. So practically working on balancing the budgets through mostly reducing government expenditures, broadening the base, reducing the tax rate. Could you share with us some of those countries that you visited?
Okay, I think that what we've seen with a lot of the developing economies of the world is that those who have had good governments, and a number of those countries have had good governments, bad governments, good governments, bad governments, so they've had a mix of them. But those that have been really successful have been those that focused on how do we make our country more competitive than others. And if we make it more competitive, then we're going to get more investors. And we need those investors because it's from those investors that we'll get the additional jobs that will actually lift the standard of living of our population. One of the measures that they've realized has a major effect on competitiveness and attracting capital investment is tax rates and how the tax system operates. So that normally refers to complexity. If you have a simple system, say with one rate, and no exemptions, then everybody understands it very clearly, and it helps to improve competitiveness. If you have a highly complex system with a variety of rates where there's a lot of religious activity going on, then it chases investment away. So there's about 29 or 30 countries in the world today that have flat taxes. Some interesting things come out of it. For example, when Russia went to a flat tax, it took its highest rate from about 60% for the top income earners, and it introduced a flat tax of 13%. Everybody expected that there would be a significant drop in revenue, Within 2 years, the revenue from that 13% flat tax was 100% higher than it was under its progressive rate in the past. In addition to that, a whole lot of the illegal activity or the black economy disappeared and came into the white economy. Because of very low tax rates, it's just not worth the risk of cheating. Also, if you have a flat tax with few exemptions, then there's less opportunity to be able to cheat. So finally, it comes down, in my view, in the developed economies of the world to an issue of fairness, and it's a matter of how you actually define fairness. Most of us would agree that people on higher incomes should pay more tax than people on lower incomes. If you measure that in terms of how much tax is paid by the person on low income and how much tax is paid by the person on high income, then I think you have a very fair system. But you get that fairness if you say, for example, had a 10% rate and somebody on $10,000 would pay $1,000 of tax and somebody on $100,000 would pay $10,000 in tax, 10 times the amount. So the debate shouldn't really be about the rate, it should be about the quantity of tax paid. And the other thing that I think comes into that fairness debate, and that is that everybody should pay some tax. Everybody consumes the goods and services and benefits from the programs that governments put in place. They should do some of the paying. There shouldn't be a situation where there's a whole group of people that are exempted from having to pay for any of the services that they receive.
Right, and also as we reflect on what Senator Sessions said a few weeks ago, talking about unfunded liabilities. Unfunded liabilities of this healthcare bill will be some $17 trillion. Unfunded liabilities of Social Security is $7 trillion, and the unfunded liabilities of Medicare is about $30 trillion. So we obviously need the most effective and efficient way to collect taxes without embedding social policy in it. And what you're saying, by broadening the base, reducing the rate, and treating all taxpayers equally, that would be the fairness, and under the rule of law would be the best system to accomplish.
Yes, I agree, but also what you've touched on is something that highlights another issue that we have with governments, and that is that governments have a very lax accounting system in that they don't have to disclose the kind of information that a corporation in the private sector has to disclose. And governments are often not good at making transparent their debts and liabilities, which in a private company situation are very clear because they have to account to accrual standards. So a lot of the liabilities that governments have remained masked because of poor accounting standards. If they were more transparent, then the public would not be as tolerant of the behavior that's occurred as it is at the moment. And that was mainly because the public lived in ignorance of the problems that were building up inside its governments. At a state level, that is particularly prevalent where you look at pensions for retired workers and for workers yet to retire. They've been underfunded for years, and all of a sudden now the size of that liability has become apparent. And in some places like Rhode Island, the beneficiaries of those pensions are unable to be paid. Now that's really bad stuff, and we need to get on top of that. And if we got on top of that, then I think that a lot of these other problems would start to disappear. But it's the fact that governments have for a long time been very good at disguising both debt and liabilities, and it's only now that we're beginning to realize the consequences of ignoring debt and liabilities.
We should also actually mention here that you personally were behind the initiative of bringing U.S. Transparency and Accountability Act, whereby all government expenditures should be listed transparently on the internet in the U.S.
Yes, I think that certainly has been helpful in this day of technology and the information revolution. It's now much easier to require higher levels of transparency from our governments. And the fact that we now have many governments at a state level across the United States who disclose their spending online, I think that's a major improvement. That movement hasn't gone far enough yet. Certainly the federal government does it. What we're not seeing in that disclosure is what's the debt situation of those governments and what are the liabilities, both real and contingent liabilities. And that would certainly improve it. We're also not seeing local government or other government entities like school boards and so forth having to disclose their spending. Once you have to disclose your spending, then you are going to be more cautious about spending that would be considered by your public as inappropriate. And you only have to look at the recent controversies there's been with the Government Services Administration and the lavish kind of conferences that they were funding. As soon as that becomes transparent, then it stops. If it hadn't become transparent and people hadn't found out about it, then they would still be doing exactly the same thing. So transparency is a very important part of accountability. It's what enables us to pass judgments on, do I approve of this or do I not approve of this? Is my government spending money on the things that I think they should, or is it spending money on things that I don't think we should be spending on?
And this is certainly something that not only is essential for the federal government, but it's certainly something that individual states should consider as well, as we look at state governments spending significant funds at the local level, but with the counties and townships too, greater transparency, as you've highlighted, will certainly make a difference at the end of the day.
Yes, I agree. The best way to discipline behavior, which the founders recognized when they were putting together the government of the United States, is that if the people see it, then the people will be able to determine whether the performance of your elected representatives is good or bad. In the absence of that sight of it, then bad activities will continue to grow. That's one of the reasons why the public's very suspicious of the lobbying industry, because they see so much of that decision-making being made behind closed doors and in secret. Whereas if it was out in the open, then I think their concerns about some of the lobbying would dry up. I see no reason why segments of the economy shouldn't lobby for lower taxes, shouldn't lobby for the elimination of government activities or controls. That's quite appropriate. But I'd like it to be done where I could see what was happening, where everybody else who was interested could see what was happening.
That is so true indeed, and we certainly thank you, Mr. McTigue, for taking time and joining us on America's Roundtable, and your thoughts, your ideas, as well as the experiences that you've had here in the United States, as well as what you've accomplished in New Zealand and advising different countries around the world has truly made a difference. We are joined by the Honorable Maurice McTigue, who is the Vice President at the Mercatus Center at George Mason University. He's a director of the Mercatus Center's Government Accountability Project and a member of its Spending and Budget Initiative and State and Local Policy Project. For those that are interested in learning more about the work of the Honorable Maurice McTigue, we would certainly encourage you to visit the Mercatus Center's website. And there are a number of videos that are also listed that convey the speeches that were delivered by the Honorable McTigue. Thank you once again, Mr. McTigue, for joining us, and we certainly wish you a wonderful weekend.
Thank you.
Thank you very much, Natasha and Joel.